go from the very front page. Sustainability reporting, overview, and application. When we talk about sustainability accounting, because of our time, can you see that sustainability reporting refers to the process of disclosing an organization's what? See it there. Environmental impact, social impact, governance practices, economic contributions. In sustainability reporting, we are not limiting ourselves to only reporting the final account. In fact, from the word sustainability, when you align this with our principle in accounting, the going concern principle, businesses now should be more concerned with the long-term sustenance of what they do. It is not sufficient that you come into an environment, you set up a business, you manufacture your products, people from that environment buy your product, they patronize you, you make profit, then you cause havoc to their environment. So in sustainability reporting, we are saying that part of reporting in our final account or in our annual report, where you are going to report environmental impact. What are your activities causing to the environment? Some other people even practice what we call social responsibility accounting. What are you doing to the people within the environment wherein you carry out business? See it here, social impact, governance practices, economic contributions. Now, if you want to explain this again briefly, it is a report that explains how an organization makes profit. You don't stop at profit. How it affects people, how it affects the environment, and how it governs its operation ethically and responsibly. The purpose of sustainability reporting, among others, as you can see on the screen, include promote transparency and accountability. Remember, we have said before that one of the limitations of the IFRS or IPSAS is information overload. They want you to disclose. And we said the three key objectives of the adoption of IPSAS APRA and IFRS are what? Accountability, transparency, and comparability. So one of the purposes of sustainability reporting is what? Promote transparency and accountability, help stakeholders make informed decisions, enhances corporate reputation, supports long-term business sustainability, encourages ethical and responsible business practices. We go to the next slide. Key concepts in sustainability reporting. See it here, ESG reporting. ESG stands for environmental, social, and governance. And when you pick the environmental, we are talking about what? Carbon emissions. That is here, pollution, carbon emissions. What your factory, when I say factory now, what are you dissipating to your environment in terms of carbon? Pollution control, what are you putting in place to control air pollution, water pollution, and the rest? The energy consumption, waste management, climate change, water usage. Then when we talk of the social, we are talking of employee welfare. Are you the type of company that you don't care about the welfare of your employee? All you are after is to maximize profit. That's the social there. Workplace safety. Like this morning, before I came to this multipurpose center, where we are having this lecture, I've met some architects. Their own is to design, to restructure. I just left their office. And one of the things those guys said to me, that aside just helping you to redesign or to come and help you restructure as the need arises a place, they also put in place the safety of the people who will come and use the center. And it is paramount. It is a core consideration here in the United States, workplace safety. Then we have diversity and inclusion. Are you gender sensitive? That's what we are saying here. Or are all your employees 90% male, 90% male, then 10% female? human rights, community development, customer satisfaction. Then when we say governance, here we are looking at the board structure, the composition of your board. Are they people of the same tribe, ethnicity? What's the board? Ethical practices. Is there integrity or no integrity? Corruption. Those are the things you look at. Ethical practices. Maybe they are sharp dealings, cut corners. Transparency, the internal controls. That's governance. Do you have strong and reliable internal controls put in place? Then compliance is one thing for you to even have all the controls. It's another different ball game for you to comply. Then risk management. Point number 3, importance of sustainability reporting. And when we talk of importance here, there are 2 categories or 2 major headings: benefits to organization, then benefits to society. When you look at benefits to organization, we say number 1, improves public image. Image is about everything. When even people try to talk your organization down and you have done the needful, other people who have benefited have also seen cases where the people within an environment were the one who prevented regulatory authority to shut down an organization. But when they came, they want to do their work. Those people said, no, this organization has added a lot of value to us. Resolve this thing amicably. Another benefit to organization is improve stakeholder confidence, encourages long-term profitability, attracts investors, then reduces environmental and legal risk. Then when we say importance of sustainability reporting to societies, that's benefit to societies now. 1, promotes environmental protection. See that? Promotes environmental protection, encourages ethical business practices, improves social welfare, then supports sustainable economic growth. These are the benefits of sustainability reporting to organizations and society. Let's see point number 4 here. Key frameworks for sustainability reporting. Ladies and gentlemen, when we talk of framework here, you know frame. Frame are structures that support a particular item or a particular policy. Of course, policy may be part of the structure they want to support, but they are like rules, they are like regulations, they are like structures that support a particular idea. Now, the key framework for sustainability reporting, as you can see on the screen here, we have the Global Reporting Initiative. That one focuses on what? Widely used global sustainability reporting standard. Then it covers environmental performance, social performance, governance, disclosures. See it again, ESG. We have the E there, environmental performance. We have the social performance, and the G, governance, disclosures. Objective is to improve transparency and comparability. Then, still key frameworks, we have B, International Sustainability Standards Board, ISSB. Just the same way or similar to what we have in IFRS. The body responsible for the release and publication of IFRS from time to time is what? IASB, International Accounting Standard Board. That's to draw our attention that sustainability reporting has come to stay. It's not even a new idea or a new term again, because there is a board responsible. Focus of this board, global sustainability disclosure standards. Objective is to provide investors with sustainability-related financial information. And the key standards, we already have those standards in place. IFRS S1, General Sustainability Disclosures. Then we have IFRS S2, that is sustainability, climate-related disclosures. Then, still framework, we have the third one here, integrated reporting, IR. And the focus of that one combines financial information and sustainability information. See it here, integrated reporting, 2-in-1. Like we said during the course of the introduction, I said it is not sufficient for any company that want to last long, focus only on profit. You make profit this year. Of what value is the profit you have made this year if you don't put in place relevant structures or you don't take relevant action to last in business? So you can meet that going concern principle. The objective is to show how organization create value over time. And in some of our presentation, we have said, wherever there is value, profit will come. Don't be carried away only by profit. You want to make profit, all you are just thinking about is how to siphon money from people. No, create the value first. Then the money will come, the profit will come. And there is this popular saying, where the carcass are, eagles will gather. That's value. Components of sustainability reporting. And you see organizational profile is here. And this organizational profile include what? Company name, nature of business, vision and mission, and operational locations. Company name, for example, if you want to practicalize this, we are talking of organizational profile. It's a company name, it's a White Knight Consulting. Nature of business, consultancy, training, installation of accounting system, auditing, and the rest. Vision and mission, to be the first-class consulting firm in Africa and the rest of the world. And it's an operational location. We have office, you state the office in Nigeria, and when you have also abroad, you state that one. Now we have the B part of this component, sustainability strategy. This strategy explains what? 1, sustainability goals, ESG priorities, long-term commitments, environmental disclosures, which include carbon emissions, energy consumption, recycling activities, pollution management, renewable energy initiatives. Ladies and gentlemen, I don't want to jump, but let me give you one explanation. Always I like people, rather than saying you want to memorize a particular point, the way I work, even those past few years in the university, exam period are my best period while in the university. In fact, when they say it's time for exam or test, I jubilate. What do? It's not that I know it, nobody know it all. I am used to forming a mental picture of the concept, because when you begin to see what your lecturer is saying, or when you begin to see what is written, that is what is called revelation. And you may doubt what you hear, but what you see, you don't doubt. So I found a mental picture. I've seen a question before, a question in auditing while preparing for my ICANN exam then. And so I look at this past case study, and then even in the exam, they ask a question, you have been appointed as the auditor of this social company, and your main work now is to even wear another cap to carry out an investigation. What and what? How will you go about the exercise? See, what I normally do, sometimes you not remember all the points, even in the exam, but I form a mental picture, or after reading, preparing for exam, I'll form a mental picture, imagine myself in that company. I will just imagination. I imagine myself in that company. I will now begin to say, what do I ask them? What do I ask them? And by the time I form those mental pictures, they stick. So the same thing when we talk of sustainability reporting, and we are saying that sustainability reporting has to do with the report on your activities within the environment wherein you operate. So the next thing we should look out for when you are writing this report is, you see, The company we are talking about, do they have anything like carbon emissions, like energy consumption, recycling activities, pollution management? What are the policies in place? Or what are the effects of these emissions on their environment? So that when you are now writing that report, you state it. So far, so good. I've compared the carbon emissions of last year with this year. You see that it increased. Then you begin to draw your conclusion. We are coming to that just to prepare our mind. Components of sustainability report. Continue. D, social disclosures. Includes what? Employee training. I mean, you are going to check within the question given to you or within their report, their annual report. Did they train any staff or employee during their health and safety, diversity and inclusion, community projects, human rights practices? Then here we have governance disclosures, which include board structure, ethical policies, compliance systems, internal control mechanisms, and anti-corruption measures. We had more speed. Key sustainability performance indicators, KPIs. Now you see that? Or environmental KPIs. Let me just go straight to that one. We are going to have this slide and possibly have the video lecture as well. Carbon footprint, energy usage, water consumption, waste recycling percentage, pollution level. So when you are given a question or you are asked to write a report, that's sustainability report for a company, these are the things you will look out for. ESG. See for the E, check the carbon footprint, energy usage, water consumption, waste recycling percentage, pollution levels. It's not just to look at them. You are looking at the effect of this usage or these items that we call the performance indicators on the environment. Social KPIs, employee turnover rate. Maybe the company is a company, they fire people anyhow. You need to get statistics. How many staff have you fired within the past 1 year? If you are reporting only for a year, how many staff? Workplace injury rate, ask questions. Training hours, gender diversity, community investment. Then we have the governance KPIs, number of independent directors. You see that? Ethical violations, audit committee meetings, compliance incidents. Then materiality in sustainability reporting. What is materiality? In accounting, what do we talk about when we say materiality? We say when an item is material, you should disclose it. When it is immaterial, you should not disclose. Even in audit reports, you will see that if an auditor say in that opinion paragraph, and he say in our opinion, the financial statement represents a true and fair view. That's an unqualified audit report. But where you see an auditor states that in our opinion, except for, it means there is a disagreement or there are disagreement. The disagreement are material but not fundamental. Because when the disagreements are fundamental, the auditor will issue disclaimer of opinion. Disclaimer of opinion. That's qualified opinion. It will just state the financial statement will not represent a true and fair view. On the other hand, when you see the audit reports, in that opinion paragraph, the auditor says, in our opinion, subject to, it means there are uncertainties, and the uncertainties are material but not fundamental. So where they are both material and fundamental, that's where you see the auditor will state, we are unable to express an opinion on this financial statement. And the question I keep asking ourselves, well, I ask people, how many qualified audit reports have you seen yourself? How many qualified audit reports do we have? For some of these banks and organizations that failed, our auditors will keep telling us all is well. They give a clean audit report. They give an all-qualified audit report, assuring the stakeholders that all is well, whereas calamity is really nothing. So information is material if it can influence stakeholders' decision. And what we are saying here, disclose such information. Why it matters? Helps organization focus on important sustainability issues. And here you can see examples of materials issues has been given here. Material issues, major oil spill, large environmental fines, significant employee strike, data privacy breach. Next, as we're about closing the theory part now, stakeholders in sustainability reporting. We have the internal stakeholders, which comprise of the employees, management, board of directors. Then we have the external stakeholders, which comprise of the investors, customers, government, and regulators, then communities. Principles of good sustainability reporting: transparency, completeness, consistency, accuracy, comparability, reliability. Can you see them? Now let's look at sustainability reporting process. It has a step. Step 1, you have to identify sustainability issues. Examples: climate change, employee welfare, governance concerns. Then step 2, collect data. Just like some of you will be writing, maybe you have even started writing your PhD thesis. I know they'll ask you to submit some topics. You collect data, energy consumption record, employee statistics, waste management data. Then step 3, analyze ESG performance. See those steps. First, identify what are the problems. Maybe you have heard rumor, a tip of somewhere that we are not saying as a sustainability reporter or as an expert who prepares sustainability report, go and be looking for rumor about their financial information will show some of these things. But it's good you know what you are looking for. Their welfare. It's not sufficient for you to ask about welfare. Let the record show it. That's where you need data. Analyze ESG performance. Compare current and prior year performance. That's another thing. Because if I go to a company, I want to write sustainability reporting for this company, and I say it's for 2026, for example, I may not have a yardstick, a basis of comparison. If they tell me, okay, for this current year, we have trained 50 employees. So what can I write about that one? How do I judge whether they've done wonderfully well or otherwise? And when I ask the question, let me see your record for last year. How many employees did you train? And I realized that last year, they trained 100, and this year they trained 50. I will ask for that question. Why the reduction? Because these are the things that will form part of the sustainability report. Say, identify strengths and weaknesses. Then step 4, prepare sustainability report, which include ESG disclosure, sustainability KPIs, then commentary and analysis. See step 5, review and assurance, internal review, external assurance / audit where applicable. Then here we are saying identify issues. It's all the same thing. We have said there, collect data. That's the explanation. Common challenges of sustainability reporting: lack of reliable data. Lack of reliable data. Some organization will only give you the data they want you to see. How reliable are these data? High reporting costs. Lack of standardization, different reporting framework create inconsistencies. Greenwashing, meaning misleading stakeholders by exaggerating sustainability performance. You see, we have brainwash. Here is greenwashing. That is, you are telling stakeholders that the company has done outstandingly well, whereas the reverse is the case. Greenwashing in sustainability reporting, meaning false or misleading sustainability claims. Just as we have also, I would say, accountant practice, what is called window dressing, cosmetic accounting, income smoothing, makeup accounting. Same thing here. We have greenwashing. See the meaning? False or misleading sustainability claims. Examples of greenwashing: claiming environmental friendliness without evidence, hiding or downplaying pollution incidents, overstating ESG achievement in report. What are the risks of greenwashing? Loss of credibility, legal penalties, investor distrust. Let's quickly see, before we take the practical question, financial reporting versus sustainability reporting. Are they the same? For financial reporting, focus is on financial performance, just as we have it in case of IPSAS, International Public Sector Accounting Standard, IPSAS 1, that is General Purpose Financial Statement. There you have statement of financial performance, statement of financial position, statement of changes in net asset, statement of cash flow, and information to be disclosed in published financial statements. So that is financial reporting. But when you go to sustainability reporting, it focuses on ESG performance. And we have said ESG, their environmental, social, and governance. That is what bothers you. Then, number 2, see, mainly for shareholders. Financial reporting is mainly for shareholders. The shareholders want to maximize their wealth. Before now, we talk of maximization of profit. But then, some shareholders now bother more about maximization of wealth. That's the long run. But for sustainability reporting, can you see, for all stakeholders? Then financial reporting is based on accounting standards, IPSAS, IFRS. But for sustainability reporting, we say based on ESG frameworks. Then for financial reporting, it measures profits. That's the major thing. Then for sustainability reporting, measures long-term sustainability. Integrated reporting, I've mentioned that, it combines both financial reporting and sustainability reporting. I've seen people talk about integrated reporting. That is, we are no longer bothered about the maximization of profit, but we are also interested in how long can we remain in business, sustainability, and how long we remain in business is a function of ESG. What are you doing in terms of environment? The environment you pollute, the environment you eventually collapse. How can you continue business in that environment? Or the environment you don't care about the people around there, and you have damaged what they even have as social amenities instead of you contributing to that. And even your staff, you don't care about your staff. How will you sustain such business? That is ESG there. Objective, integrated reporting, explain how the company creates long-term value. The benefits, we have better decision making, improved transparency, stronger stakeholder confidence. Now, how to answer examination questions when it comes to sustainability reporting. I will leave you with this. We'll share it. Identify ESG areas, analyze the data, interpret the findings, draw conclusion, recommend solutions. Those are the steps. Practical examination approach, calculate percentages where you are giving data, calculate. Then compare prior year and current year. Then identify ESG strengths and weaknesses, interpret sustainability implications, then recommend corrective actions. Very, very simple. Just follow those steps. The question you are giving in exam will inform your decision on what to do. If they say calculate percentages and you are not giving data, you cannot go and fabricate one. All right. Let's see. Sample sustainability reporting commentary. The company demonstrated improved social sustainability through increased employee training and reduced workplace injuries. However, rising carbon emissions and energy consumption remain significant environmental concerns, requiring stronger climate action and energy efficiency strategies. Key examination terms to understand. I will leave this for you. ESG, carbon footprint, that's total greenhouse gas emissions. Materiality, importance of information. Greenwashing, misleading sustainability claims. sustainability KPI, sustainability performance measure. The integrated reporting, combination of financial and ESG reporting. So in your exam, I can give you a case study. I'm already doing revision now. I can give you a compulsory question, maybe section A, compulsory, attempt question 1 and any other 3 or any other 4, depending how many questions. And I will prepare the question in such a way that it will be an integrated reporting. One part of the question you report, maybe prepare statement of financial performance if it is IPSAS we want to test. But mostly when we say sustainability reporting, it's more for company. But if it is IFRS, it means you'll be asked to prepare profit, statement of profit or loss account and other comprehensive income. And as the case may be, you may also be asked to prepare the statement of financial position. Then in addition to that, you will now do your sustainability reporting 2-in-1. PhD Unsuk, Nigeria. Key takeaways. 1, sustainability reporting is now a global business requirement. ESG performance is as important as profitability. Organizations are expected to operate responsibly and ethically. Investors increasingly rely on sustainability disclosures. Strong sustainability reporting enhances long-term corporate value. Then sustainability reporting requires transparency, accuracy, and accountability. In conclusion, sustainability reporting has become a critical aspect of modern accounting and corporate reporting. Organizations are no longer evaluated solely based on profitability. As a matter of fact, some people will even tell you accounting profit are paper profit. They are illusory profit. Or how do we explain that a company disclosed a profit after tax of 50 billion naira, and yet the same company is struggling to pay a debt of 5 million naira? What an anomaly. So accountants, auditors, and financial professionals must therefore develop strong knowledge of ESG reporting framework, sustainability disclosures, and integrated reporting practices to remain globally relevant in the evolving digital and sustainability-driven economy. So we have the case studies. I'm going to share that. Please check from your platform. I've sent the case study there. I've sent the case study. What we are going to do now, there are 2 case studies we have. I'm going to solve one, then I will leave you to go and practice the second one. So I pull up the case study, just watch case study 1, practice question. Now, before we look at that case study, you can unmute if you have any question or comments. I've told you I'm going to share this slide on our platform as well as the video of this lecture. And I encourage all of you listening to me. It's not alone, or it's not enough for you to just watch that video on YouTube. You should subscribe. Is that okay? Subscribe to that channel because there are other important information that will be required both in your academics and in practice. You need to do that. So let me share with us. See the question. Practical questions, this case 1. All right. ESG performance and sustainability reporting analysis. Miss Juliet, please unmute yourself and ask your question. Make it very snappy. We don't have all the time.
Thank you, Prof. Good evening, sir. Just a clarification, not a question. On the where we are trying to measure the the performance, what financial statement does and what sustainability does. There was a place where you said that financial statement is basically for the shareholders, and that sustainability report is for stakeholder. But when I was going on during my university days, we were told that the financial statement of any company is based for all the stakeholders. The stakeholders are maybe the lenders, then the shareholders, everybody. But with this one now, so I'm trying to now place this understanding, like, is financial statement basically just for the shareholders or for all stakeholders? That is just a clarification I want, sir. Thank you, sir.
I get your question. Now, what we are saying here is that when we say financial reporting, in companies, you are using the money of some people to do business. That's why we say business entity concept. The business is separate from the owners. And remember, the accounting equation says also ownership is equal to ownership. Asset is equal to capital plus liability. The whole asset you see in companies either come by way of equity. So in trying to differentiate between financial reporting and sustainability reporting, we are not focusing, we are not saying financial reporting is only for shareholders, but the primary people who need financial reporting are people who partake with their hard-earned money. That's what we are saying here. Of course, when you say financial reporting, and we do not include sustainability reporting, bankers, we need your financial reports when you want to collect loan from them. Even investors, we need your financial reports when you want to convince them to bring their money into your company. But for purpose of segregating who are the primary users of reports, I'm using the word report now, mainly, see the language there, I did not just put shareholders, I say mainly for shareholders. That's why we say the debenture holder is a long-term creditor of a company who is expecting or who has a creditorship interest in the company. And what is the price paid to the debenture holders? Interest. Then the ordinary shareholders is also a long-term creditor of the company who has parted with his money, and they issue him a certificate calling him a shareholder. What's his interest there? How do I get return for my money by way of dividend? So the main, get that language there. I did not say if I put shareholders, that means they are the only one, but I will say mainly for shareholder. Hope that is clear, right?
Yes, sir. Thank you, sir.
All right. Let's go back. I want to be sure somebody clarify that you are seeing my screen very well.
Yes, sir, we can see a screen.
Yes, see your screen.
All right. A manufacturing company, Green Tech Manufacturing PLC, is preparing its annual sustainability report in line with global reporting initiative standards and ESG disclosure requirements. The company provided the following data for the year ended 2025. And we say in 2024, see revenue 4.5 billion, 2025 5.8 billion, profit after tax is 20 million, 710 million. The energy consumption 950,000 kilowatt. Then for 2025, 1,150,000. Carbon emissions 1,800 tons for 2024 and 2,400 tons for 2025. Waste recycled 35% for 2024, 62% for 2025. Employee training hours 1,200 hours for 2024, 2,850 hours for 2025. Workplace injuries 18 cases 2024, 7 cases 2025. Community development spending 12 million for 2024 and 40 million for 2025. Management claims that the company achieved strong sustainability performance in 2025. Questions. Analyze the environmental, social, and governance performance of the company and identify key areas of improvement and concern. Number 2, calculate and interpret the following sustainability indicators. One there is percentage increase in carbon emissions. Two there, percentage increase. Can you see that? In community investments. Then reduction rate in workplace injuries. And the last part of this question says, prepare a brief sustainability reporting commentary suitable for inclusion in the company's annual sustainability report and the commentary strategies for improving future ESG performance. Just 1-2 students who are indeed in class. Ladies and gentlemen, man is essentially a spirit, having a soul, living in a body. Even when I teach students practically or physically in class, I notice some of them are seated practically in class, but spiritually and psychologically, they are disconnected. They are not in class, not to talk of online, virtual. And maybe some of you, you just put it there, you are doing some other thing. So I want just 2 students who is really following these lectures. And unmute yourself that if you are giving this kind of question the way it is in exam, and with the explanation and keys given to you, how do you go about this question? Does somebody throw a light? How do you approach this? Anybody want to try? With what we have discussed so far, when we say environmental, they have their own elements that form environmental. Then we have social, and among others have told us social has to do with employee, and we have all of them here. Carbon emissions, waste recycle. Any attempt? All right, don't worry if you don't want to attempt, but if you want to, please unmute. It's good we communicate, so we know we're on the same page. While we are waiting, tell me what you are seeing on the screen now. Huh? Can somebody tell us what you are seeing?
A whiteboard.
It's a black
whiteboard with pencil.
A whiteboard. So if you have downloaded that question, I will just take the solution. I've told us here I'm using, I'll make the solution as short as possible. See, analyze the environmental, that's question 1 now. Analyze the environmental, social, and governance performance of the company and identify key areas of improvement and concern. Ladies and gentlemen, if you look at, let me pick now, just hold on. All right. Solution, if you can see, can you see my screen?
Yes, we can, Prof.
For environmental, the areas we need to pick, I'm answering question now, you say environmental, social, the areas of concern from our question, you say number 1, environmental. Environmental, we look at number 1, waste from the question. Waste recycling. Waste recycling. Please, some of these things, as I'm saying it, you can be writing. Waste recycling. And if you look at waste recycling, is there improvement? Check your question. Is it increase or decrease? From our question, it increased from 35% to 62%. See it? From 35% to what?
To 62%.
62%. What will be your comment on this? Very fast. Is it better waste management or otherwise?
It's better waste management.
Thank you very
It's
much.
Better
That
waste
is what-
management.
That is what we expect you to do for environmental. After saying it increased from 35% to 62%, put that comment. Because of our time, I'm not writing all those comments. But let's look at another area, or you check the question yourself, identify another area. What about energy consumption? You know, we are talking of environmental. Energy consumption.
That's
What's your comment about that?
is still
It increased, see my arrow, from
yes.
from
Yes.
what?
50,000 kH
Thank
kWh
you.
to 1,150.
To what?
1,150.
1,150,000 kilowatts. So, what will be your interpretation for that? Be fast, be fast. Is it a good one or the other side?
The consumption is increasing on, and which is negative, is not
not a
good.
good
It's
one.
negative. It's not a good one because
It's not a good
increasing.
one. So,
Yes, they
we
they
can
are
conclude
not
it's
spending
possible.
more money.
Yeah, possible inefficiency. That's very correct. It means you are following. Since this is number one, I can just decide to be using A, B, if I like. Then another key indicators, performance. We are still talking of environmental. Carbon emissions increased. Carbon emissions. Can you see anything? Carbon
Yes,
emissions.
yes.
So what
It
happened to
increased.
carbon emissions?
It increased by 600
It also
tons.
increased from 1,800, right?
100 tons.
Yes,
To
to
what?
2,400.
2,400.
2,400. What will be the implication of this to the environment? Somebody make a comment. What is the implication of this increase?
Increase emission to the environment.
Increase in pollution.
Thank you very much.
The
That means
environment will not
worsening-
is not
yeah,
sustainable.
it worsens the
Due to
environment.
increase in
That's
carbon
environmental
emission.
pollution. Correct.
Yes, there will
Now-
be more pollution in the environment.
Correct. Now I'm going to clean this. I will go straight to, after environmental, what are we analyzing again? Social. All right. If we go to socials, as somebody identify and what criteria we need in socials, social performance. See it here. Social performance. Employee training. I've told us, if you check that note, I'm going to share the note later. Employee training. What did you observe there? Increase.
Yes.
From
1,200
hours.
hours to 2,850 hours.
2,200 hours to
2,850 hours.
2,850
Hours.
hours. 2,850, right?
Yes, Prof.
So somebody help us comment on that. Is it a plus to the company or a minus?
It's a plus.
It reflects stronger investment in staff development. Correct.
Yes.
Then what about workplace injury? This is how you analyze this, Workplace injuries. What can we see from the data given?
We have 18 cases in 2020.
See my arrow. It reduced, right?
Yes.
18
It's a
cases
It's a
to
plus.
7 cases. So what will be your conclusion there?
High level of staff safety.
Then another point under social performance, community development, spending, community development spending. What did you notice from your data? Is it increase or decrease?
Increase.
Increase.
Increase, right?
Yes. Yes, Prof.
Improved community
From what to what?
relationship.
Increase from 12 million
To 40,
to what?
40 million.
40 million.
And what will be your interpretation there?
Improved community relationship.
It shows stronger corporate social responsibility. It shows stronger. Then the last one is governance performance. You see the way you do when you are writing sustainability reports. You look at environmental. So it depends on your ability to identify the key performance indicators that measure environment, that measure social, then the governance. So the last one we are going to look at now is the G, the governance performance. Because of time, once I take the second part of this question, I will leave you with the report. So we have C, the governance. The governance performance. Now for governance performance, what are the yardstick from our question? This one may not involve any calculation. See, number one, are we there?
Yes,
Increase
Prof.
ESG-related spending, suggest management commitment to sustainability. Are we there? Improve disclosure, support transparency, and accountability. See something, somebody say increase revenue, fine and good. But for this particular one of the area you will look at is this, improved disclosures, support transparency and accountability. But again, for this same governance, there are areas of concern. Let me tell you quickly. B, we are working on this. Let me give 3. That's B now. No detailed governance information provided on C. No detailed governance. Don't just conclude that everything is well. No detailed governance information on. This is where you will now take the key performance indicators when we talk of governance here. There is one, board oversight. We don't have any information in this question. Those are the things when you are doing your analysis. Don't just go and look at the positive side only. 2, ESG policies. We are not giving in these questions. ESG policies. 3, ethical compliance. Ethical compliance. Then 4, risk management. Ladies and gentlemen, where are you going to get these items from? This governance performance. When you get your notes, when you check, we have talked about key performance indicators. When you are talking of sustainability reporting, and I'm saying, okay, environmental, what are those KPIs to measure environmental performance? When we talk of social, what are the KPIs for social performance? Then the governance. A quick one, we are going to stop shortly on this. We'll not use the whole time for sustainability reporting, because in another 15 minutes, I will quickly look at one other topic, then we'll call it a day. All right, the second part of that question says what? Calculate and interpret the following sustainability indicators. The first one there says percentage increase in carbon emissions This is PhD class. All I will do for us to save our time, I'm going to give us the formula. Then settle down, fill in the blank. Each time we want to calculate, see the formula, we are looking at A, the first part. That's question 2 now. A, we are looking at what? Percentage, what? Percentage increase in what?
Carbon emission.
Carbon emission. Let me just shorten it like this. Ladies and gentlemen, you know, generally speaking, when you want to calculate percentage, you want to see increase, what do we have last year? What do we have current? Usually, the percentage increase, see the arrow I'm using, is measured as the new value. New value. Where do we get the new value? That's the current carbon emission, which is 2025, minus the old value. You put the old value. Are we there? Then all over what? Somebody help us if you are following. All over what? Is it new or old?
Old.
The
All
base
over
year.
old.
Thank you. Thank you. Our own SUK students are great. Old value. You make
Times
the work
100
easy.
over 1.
Times, thank you, times 100.
100 over 1.
That is all you just need. What is the new value for carbon emission minus the old value, all over old value? Give you the percentage. That's why I say fill in the blank yourself. Then number 2, say percentage increase in what? Community investment. I'll put that one, percentage increase in community investment. I'll leave it at this. The formula, now that we know the formula to calculate percentage increase, somebody give us the value. What is the new value for community investment? How much?
40 million.
40 million.
Minus what of the old?
12 million.
All over what?
12
Old
million.
value.
All over.
Times 100. Whatever you arrive at is the answer. Are we there? Then the last one, number 3, says we should calculate a reduction rate in what? Workplace. Reduction rate in workplace. So somebody help us with the formula. Is it the same thing?
Yes.
Reduction rate, God will help you. Are you saying yes?
Yeah, probably that level I've been busy.
It's
Online class.
It's opposite.
Please mute yourself.
It should
Mute
be
yourself.
old value.
Those
Old value
talking
minus new value divided by new
thank
value.
you.
Times
It will
100.
be old value, because if you retain the same formula, it's misleading. Old value.
Program when it level took one.
Please mute yourself. This is not professional at all.
Is it 1 or 2?
Old value minus what? New value. All over what now?
New value.
All over old value. Multiply by 100.
100.
Multiply by 100. So this is what you need. Now, for the sustainability reporting commentary, based on your result here, you just write a comment. That's the third part of that question, which I will leave you to go and do yourself. Brainstorm. We stop here on sustainability reporting, except you have questions, you need clarification. All right. I will quickly close this. Then the next 10 minutes, we take just 10 minutes. So you will not accuse Adebayo in your exam that he did not teach us this one. It's just to draw your attention. Your question has not been set, but it's good. If you look at the course outline, is only 2 left. And from that 2 left, 1 is going to be given as our continuous assessment. That should be 30%, 30 marks. I'm going to share that with the class governor. That has been the practice all these years. This is a research class. And it's good I have give you an idea. That should be the last topic on your course outline there. It has to do with research in reporting standard. We are going to pair you. 2 of you will take a topic. I'm the one to give out the topics. Then once I give you the topics, 2 of you will take 1. And jointly, you're going to write an article that has not been published by anybody anywhere. And freely, once those articles you submit is reviewed, it's going to be published in one of the international journals here in the US. I thought somebody would say, thank you, Prof. Or you even say you want to pay for cost of publication.
Thank you.
So that it will be on record that you also have article. And in terms of promotion and the rest, you can always count on that. The last
Thank you, sir.
You are welcome. The most important thing, please do a good job so that your article will qualify for publication. In the journal is called IJAPIS, International Journal of Finance and Information System, something like that. Digital tools for financial reporting and analysis. That is what we are seeing last and will be done for today. By way of general overview, digital tools have changed the way professionals and the rest handle their assignment. Of course, it has brought about and is still bringing about efficiency, accuracy in decision making. Here are the digital tools: cloud-based financial management system. That's digital tool we need in financial reporting. Enterprise resource planning, ERP systems. We have business intelligence tools such as Power BI, Tableau, part of them. Financial planning and analysis software, accounting software. And when you say accounting software here, the list is numerous. That's why we talk of Sage 50, QuickBooks, That Easy, Sun System Accounting, MyOb Accounting, to mention but a few. Then we have data analytics platforms. Digital tools for accountants continue: robotic process automation, RPA, blockchain and distributed ledger technology, artificial intelligence and machine learning. Then we have Excel and advanced spreadsheets. These are all digital tools. What are the benefits of usage? Efficiency, accuracy, real-time access, insightful analysis, scalability. Say cloud-based tools can scale with the growth of the organization. I can adjust itself as organization grow. See these cloud-based tools. If it is the desktop one that you install, sometime every year they have to upgrade. But if it is cloud-based, it's automatic, it updates itself. Then collaboration, enhanced collaboration through cloud platform and integrated system. So here we explain blockchain, a decentralized and distributed digital ledger technology that records transactions across multiple computers in a way that ensures the security. That's where we talk about triple entry here. So a digital asset is a broad term that refers to any form of content or asset that exists in digital form. And we have digital assets. Are we there? Let me go back to that.
Yes, sir, we are there. Just a lot of us, the network locked us off.
No, don't worry, we will soon be. We'll summarize. The good thing is I'm recording this. You can watch much later. I will just make it. This blockchain technology, and under a digital asset, we have cryptocurrency, digital tokens, digital collectibles, software and digital intellectual property, digital securities, digital commodities, digital records. For cloud accounting, it's a modern accounting approach that utilizes internet-based technology to store financial data and perform accounting functions. Here is a brief summary of its key aspects: online accessibility, real-time update, cost efficiency, scalability, data security, automation, collaboration, third-party integration, backup and disaster recovery, compliance and updates. For the purpose of your exam, I say you leave out these case studies. Time will not permit us, but on your own, this is a case study on blockchain and digital assets. The case study is there, then the solution follows. And when you look at this, let me show you something. It's just testing your knowledge of double entry. See, for example, imagine you are the financial accountant at a tech startup named TechCoin. The company operates in the blockchain space and deals with various digital assets. TechCoin has recently acquired a significant number of tech tokens, a digital asset that is built on a blockchain platform. These tokens are traded on various cryptocurrency exchanges. As a financial accountant, you are tasked with recording the transactions involving these tech tokens, preparing the necessary journal entries, and disclosing the digital asset in financial reports. And see the assumptions. TechCoin acquires 10,000 tech tokens at a cost of $5 per token. Transaction fees for purchasing the tech tokens amount to $500. During the financial period, TechCoin also sold 3,000 tech tokens at a price of $7 per token. Transaction fees for the sale were $200. The reporting period is the fiscal year ending December 31, 2023. TechCoin follows international financial reporting standard. For financial reporting, income tax rate is 30%. And see your task. Very, very simple. That somebody will say, sir, please bring something similar like to this in our exam. Because it's just testing your debit and credit knowledge. See, tax 1, journal entries. Prepare the necessary journal entries for the following transactions. Purchase of tech tokens. So what is difficult in this? All you just need to do, when they say purchase of tech token, which account am I debiting? Which one am I crediting? Small narration. That's journal. 2, transaction fees incurred during the purchase. Which account am I debiting? Which one am I crediting? 3, sale of tech tokens. Which account am I debiting? Which one am I crediting? Transaction fees incurred during the sale. Tax number 2, financial disclosures. They provide a brief description of how TechCoin should disclose the digital assets in their financial reports, including the key information that needs to be included in the notes to the financial statement. Ladies and gentlemen, the solution, you have it. Go and study. I have not set your exam, so there's no guarantee that something similar to this will not come. Let me set first. See the solution. Tax 1, journal entries. Purchase of tech tokens, debit digital assets with $50,000. And in bracket, we say 10,000 tech tokens. Remember from our question, see it here, 10,000 tech tokens at a cost of 5. Multiply 5 by 10,000. It will give you $50,000. Then credit cash. Of course, you purchase. The double entry principle say debit receiver, credit giver. So the digital asset tech token is receiving. Cash is given out. Number 2, transaction fees incurred during the purchase. Debit transaction fees expense, $500. Of course, money is given out. You credit it. Then number 3, sale of tech tokens. This time around, cash account is receiving. Debit receiver. By how much? 3,000 sold for $7 each. Multiply by 3,000, you have 21,000. Then credit digital asset. Of course, asset is given out. You credit 21,000. And the last one, number 4, transaction fees incurred during the sale. Debit transaction fees expense, $200. because the double entry principle says debit all expenses. Then cash is given out, credit cash. You are done with that tax 1. Then tax 2, under IFRS, tech coin should disclose digital assets in their financial report as follows. See, number 1, presentation in the balance sheet. Digital assets should be presented as a separate line item within the non-current asset section of the balance sheet. I hope somebody will not go and say it should be disclosed under current asset, because this investment, long-term investment in digital assets, so distinguishing them from other non-current assets like property, plant, and equipment. What we are saying is, don't match investment in digital asset together with property, plant, and equipment when you come to disclosure on the pages of your statement of financial position, otherwise known as balance sheet. Let it stand alone there. The measurement, tech token should be initially measured at cost, which includes the acquisition cost of the tokens plus any directly attributable transaction cost. In this case, the initial cost will be $50,000 plus the $500. That's the initial cost. Capitalization, when you see capitalization, of course, under IFRS, if a vehicle costs me 50 million naira and it costs me another 500,000 to bring that vehicle to my place of work or our premises, you capitalize. That's what we are just saying here also. Transaction fees. Subsequent measurement, tech token should be measured at fair value, IFRS 13, at each reporting date. That's IFRS 13. Any changes in fair value should be recognized in profit or loss. Then number 4, impairment. Tech coin should assess whether there is any impairment in the value of tech tokens at each reporting date. If there is an indication of impairment, tech coin should recognize a loss in profit or loss. Asset impairment. Number 5, this is where we're going to stop actually. Let me see why my slide is jumping. Presentation in income statement. Any gain or loss arising from the changes in the fair value of tech token should be presented as part of the profit or loss for the period. Then disclosure in the notes to financial statement. In the notes to the financial statement, tech coin. Who is tech coin? That's the company. Then the digital asset is tech token. So tech coin should provide detailed information about its digital asset, including a description of the nature of the digital asset, the accounting policy used for measuring digital assets, the carrying amount of digital assets, any restriction on the ability to access or sell the digital asset, if applicable, any significant changes in fair value of digital assets during the reporting period, information about any impairment recognized during the reporting period, then any significant risk and uncertainties related to digital assets. And finally, income tax consideration. Tech coin should also disclose its income tax accounting related to digital assets. Yeah, we will leave out this one for future. Cloud accounting case study, you are not doing anything here. It's just to take you to the cloud. How do I access information in the cloud? But we'll leave that for this class. We'll stop here for today. Solution steps is there. Thank you for your attention. You can unmute. Question, comment? This is 1:19 p.m. here, which will be
From Prof, we'll use your time. Your time supersedes our own.
7:19. All right, Mr. Dotun, you can unmute. Ask your question.
You talk about assignment.
It's not now. The assignment, I'm going to make it available on your platform or sent to your class governor. I've told you that assignment is a necessity, very, very important, but you are submitting 3 weeks, it may be 3 weeks after your exam. It's not immediate. I will specify the date. And the nature of the assignment is 2 of you will pair to write an article. That is your continuous assessment, CA, 30 marks. 2 of you will pair to write an article. And once you write the article that has not been published, I'm the one to provide the topics. Your class governor may decide. I don't know. That is the last topic in our course outline. Research in financial reporting. Research. So once you do that, there is going to be a review, and anyone selected that passed that review will be published in the journal here. The journal is called International Journal of Accounting and Finance Information System. I'm not paying for that. All right?
Thank you, sir.
Go and focus on your exam. The assignment is not now. It may even be a month after the exam. But let's just say 3 weeks. The date will be there.
Thank you.
Any other question? All right. In the absence of...
Hello, sir. Hello, sir.
Okay, go ahead.
Is there any area of concentration for us?
And those are the area of concentration. What we have done now. We have...
Okay. Everywhere you cover.
Yes, we don't cover much. So, yeah. You don't have any... See, let me put it this way. It's just like that portion of the scripture that said, I've set before you this day to choose between life and death. And you now beg, please choose life. So there is nothing new that is coming in your exam that you have not either had in class the day I came, or online, or today. Is that okay?
All right, sir.
The only thing is, I will check first if it's a 6-question attempt 4, if that's the standard practice. If that's the case, you can say attempt question 1 and any other 3 hours. Wishing you all the best in your exams.
Thank you, sir.
Thank you so
Thank you,
much.
sir.
All right.
Sir, when are you sending this material, sir?
You have it later today, or latest tomorrow morning.
Okay, sir. Yeah. Thank you
All
very
right,
much,
sir.
sir.
Thank you, sir.
All the best. Enjoy your evening. Bye.
Thank you.
Bye.
Thank you, sir.
Thank you all.
Thank you, sir.